Hey everybody, today is December 18th, 2023, and today we're going to talk about the stock market and what I see the stock market going for January 2024, or the first month of the new year. Before we begin, please read the disclaimer and you can pause the video as you read it. Okay, so there's still about 2 weeks left in the month, but I thought I'd make this year-end video a little earlier this month, just like last month. The last week's going to be pretty busy with the holidays, friends and family, so I figured I'd just knock this one out earlier and right before Christmas, holiday season, New Year's season, New Year's holiday begins. And yep. So in my last video, we basically left off somewhere around here, and I said that we had this spectacular bounce, spectacular recovery, right? After we plunged below the 200-day moving average, which is this blue moving average, right? And this is the SPY ETF, which tracks the S&P 500. And we also plunged below this Fibonacci support level. So I said that, hey, as long as we stay below here, we have to give benefit of the doubt to the bears, right? We're making lower highs, and we're also making lower lows. So we have to give benefit of the doubt to the bears. But we were able to recover above the 200-day, above the Fibonacci support level, and just continue ripping, right? And I said that I wouldn't be surprised if the month of December we came down, perhaps tried to retest this gap over here as support, and perhaps bounce up higher, or if we just chop sideways, consolidated, right? Because we're also approaching this local high over here back in late July, right? But instead of that, we just ripped up higher, and part of it is because the inflation report, right? Inflation continued to go down, not by a wide margin, right? From 3.2 to 3.1, and so when the Fed, Jerome Powell, in his speech, he hinted that not only are they considering pausing, he didn't leave continuing to raise interest rates off the table completely, but the market believes that they're going to probably stop. And there's hinting at multiple rate cuts in 2024, which is what we predicted earlier this year, right? I said that I don't think there's going to be rate cuts this year, but I think then we're going to start considering cuts next year, right? And some people are they're also predicting that it might happen within the first or second quarter, right? So right now we're at 5.33 effective fund rate. Federal funds effective rate. So people think we can cut down, especially now that we're getting closer to the 2% target, right? Still high, above 3%. But as long as this continues down, right? We had we had a temporary bounce in inflation and during the summer, but it's starting to cool off, right? And so again, the next crucial data point is going to be January 2024, which is next year, right? January 11th. So the good news is that as long as inflation continues to go down, the market will believe that the Fed will likely have stopped hiking rates, and they'll consider cutting it next year, which is going to give more fuel for this incredible rally to continue higher, right? And we're getting close to the all-time high. The Dow has already surpassed all-time high, but basically this Fibonacci resistance level around 480 is where the all-time high is, and we're getting very, very close. We're only like, let's see, just about 2% away from the all-time high, right? But at the same time, if you look, we're getting close to overbought, right? RSI is getting close to overbought. We have at least seven green weekly candles in a row, right? And right now, if we continue to if we close this week green, that'll be the 8th straight weekly green candle in a row. If we look at a clean chart, right, S&P 500, you'll see that it's very rare that we have this many green candles in a row, right? It's very, very rare. Like, just going back, you would have to look very, very far back to see if we had this many. I'm not going to go through that for now, but I mean, this is just a very unprecedented, very rare sort of pattern that we're seeing, which is like we have at least 7 confirmed close weekly candles in a row for S&P 500, right? And we might get an 8th one right now. I mean, the week just started, but this is Monday, right? So it could be that we're facing resistance now, and we might end up pulling back a little bit. But for now, we've had a historic rally, and things are looking positive, right? In fact, such so that the Fear and Greed Index right now is at extreme greed. So right now we want to start being a little careful, right? Now is probably not the time to go like insanely bullish and buy go all in call options, right? Now is the time to be a little more cautious, right? Because everybody is super optimistic now, right? Especially heading to the new year, right? This is Santa Claus rally we've been talking about, right? Christmas came early, right? So but if you zoom in a little bit, we are in the short term, we are making lower highs, right? So it is possible that the rally is becoming a little bit exhausted at this point, right? We are overbought on the daily RSI, right? In this red, you see the red shaded. So we are starting to come down a little bit, So my last prediction, of course, is that I thought we were going to come down and then go up, right? Instead, we just ripped up higher. And of course, I'm happy because I'm pretty much all longs. I have no short positions or anything like that, and I have very little cash position at this point. Pretty much deployed the rest as a bounce or dip below the 200 day, right? So I caught this trade pretty well. And this, even though I'm pretty happy, this has gone exceeded my expectations, like gone a lot higher than I expected. But yeah, right now it's time to be cautious. I'm not shorting anything. I'm still holding my positions, but I think that the best thing to do for the market is just to chop sideways, build a base, and then rip up higher. This is the all-time high right here, right? We're very close, 480 SPY, right? Or about 4,800 on the S&P 500. So I do think that there's a lot of optimism going into next year, especially with the expectation that rates will continue, rates have possibly peaked, and the Fed, Jerome Powell, will consider slashing rates, right? But of course, we need to look at what's going to happen in the next meeting, right? The next CPI report in January 11th, right? And of course, by our next video, it's going to be late January for our February update. This current video is for the January update. So we'll have the next numbers by our next video in late January. But yeah, January 11th is an important date because we want to see inflation continue this downtrend, right? Hopefully we'll get to at least 3.0, if not even better. If we get below 3.0, I can see the market ripping, right? You're starting to see also the dollar starting to come down, right? As the potential for the rate hike peak is the probability that the high peak and they might that the Fed might start cutting rates is increasing more and more day by day, right? As CPI data starts to cool more and looks more bullish, right? Now we have more tailwinds going in. Now the dollar is starting to weaken, right? As the potential for rates cuts has gone up. So if this pattern is to continue, we can see the dollar plunge down to the 100 support level, right? If that is the case, that's definitely the dollar tends to move inversely proportional with the stock market. So that'll just give more fuel for the stock market to push up higher. And then we get close to the all-time high. Or here, I think that we can push up even higher, right? As price discovery kicks in, people get really optimistic. And there's a lot of other tailwinds, right? There's earnings have been stronger than people expect. There's the whole generative AI trend, and that's just getting started. There's a report that says that generative AI was going to grow at least 30% year over year until 2030, right? At which point it'll be over 1 trillion. The whole market is going to be over $1 trillion valuation, right? So a lot of tech companies are exposed to generative AI, including the top mega cap companies, right? Like Apple, Microsoft, Nvidia, and Google, and so on and so forth. So a lot of the big tech companies which have been really leading the way in the rally, right? Having pushed these indexes up, right? And especially Nasdaq, and of course the S&P 500 up. Those will likely continue to be beneficiaries of the generative AI trend going into 2024 and beyond, right? So things are looking pretty good, but of course, again, to summarize, I do think that now it is time to be a little cautious, right? We are at extreme greed, and also we have, pretty. Like I said, I have an update from last week on my Twitter page. If you haven't followed me on Twitter or x.com, please follow me. My handle is EddieLux_. And my post last week, I said that the S&P 500 continues a strong rally, but it looks due for a pullback, right? It's December 13th, right? And if you see, right, there's just, like I said earlier in this video, it's very rare that we see this many consecutive green candles in a row, weekly candles, right? And the RSI weekly is starting to get into overbought territory, right? And of course, with the sentiment being extreme greed, I'm not saying this is going to automatically crash, but I am saying that now is more time to be cautious, right? All the easy money that people made is pretty much mostly gone at this point, and now there's going to be a lot of people, I think, coming in to perhaps try to put more downward pressure, right? As we get closer to the all-time high, which is another major resistance level. This is a level that we haven't claimed in about 2 years, right? We basically peaked in January 2022, and then for the next 2 years, we basically just went down, basically in a bear market, right? Or temporary bear. This is just basically a correction, right? But it technically was a bear market when we came down below 20%, right, from the tops. But we recovered pretty quickly. And this whole year was basically just the market kind of just trying hard to recover with a temporary pullback during the summer when we had a temporary spike in inflation, right? for here, 3.0 to 3.7, peaked, and then now in the fall of this year, we're starting to come down a little bit. And hopefully the next inflation report is going to be 3.0 or below, right? So that's what we're looking for the week of for the month of January. I think for the remainder of this month, I do think we probably will chop sideways as we start to cool off from this spectacular rally, right? But I do think that January is we're going to probably try to make an attempt to hit all-time high, but I do think that important level is to hold this level at 470, right? Of 4,700 S&P 500. If we're able to hold this level, perhaps chop sideways, build a base, and then push up higher going into the next year, right? And also, January is going to be Q4 earnings, right? So so that could be another tailwind, more tailwinds to push the stock market higher, especially if the generative AI trend continues, right, into 2024, which a lot of people predict it will. But I think most crucially is going to be the CPI report on January 11th, right? If this CPI report shows that the inflation is starting to come down even more, right, peaking in September of this year, and it comes down to 3.0 or below, I do think that the market will probably rally even higher. So just keep that in mind. Be cautious, right? We are, again, extreme greed, and oscillators are telling us that we're overbought right now, right? We already have 7 weekly consecutive green candles in a row, possibly printing an 8th one. This is Monday, so who knows how this week can close, right? But if it does close another green weekly candle, we're very overbought. So just be cautious. Not saying it's going to crash, but we definitely want to at least hold 4,700 level, build a base in January, late December, going into January, and then perhaps if the Q4 earnings and also the CPI data in January is good, perhaps we have more fuel for the market to push up higher. And if Jerome Powell says, hey, we're going to start cutting Q1 or Q2 of next year in the next Fed meeting, that is also going to be very, very positive for the stock market. So I'll definitely come back in maybe late January for the February update. This video today was for the January update prediction forecast, and I hope everybody has a great holiday. Merry Christmas, Happy New Year, and I'll see you guys next year. Thank you for watching this video. Don't forget to like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.